Hey, did you guys survive the hurricane? I barely did. The media they had it so hyped up that it was like it was really tough, really difficult down here to survive. But no, it could have been worse. So we're back at it. What I want to talk about, guys, is surviving these pullbacks here in bonds and the metals, which I think we might have a little bit more to go. So uh, let's talk the markets, and then I want to talk to you guys about the new situation, the room we have, the new website coming out. Um, I'm not going to get into a whole lot of the details on the new programs we have coming, but then also the flash sale that I'm doing. So I'm still running. I don't know if you guys saw. I know it's kind of been a weird week between some vacation stuff and the storm, but I'm running discounts, guys, on the courses and the coaching program at 75, 77%. So I'm going to put that out there again. But let's talk markets. So this is probably one of the largest. I'm not sure if that if I move this, if I move it in the middle, it still ends up recording the top right. So I'll try, I don't know. I'll keep it in mind where that goes. This was probably one of the larger drawdowns that we've had year to or today, or year to date was today, and it's just because we've come from such a high level, and then we want to kind of anytime you moving your equity curve up and you get a pullback, you kind of increase your size. So as soon as you get a deeper pullback, you have a little bit bigger drawdown than the time before. But what matters is how you manage your risk around that. And what I wanted to highlight is um, there's a lot of red here, but what it also is deceiving is this P&L that's open doesn't include all the stuff we booked on the gains on the week. But nonetheless, this is what you want to care about is managing. This is pretty big drop. Not big, but I mean, this is a lot more than usual. So a little bit maybe. So when that happens, maybe you say, well, maybe I should have been more short fives. What can I do to hedge? So I actually did end up going short ultras during our live room. I'm actually short silver. And see what happens is you do that stuff once you realize how big like your goal positions may be going against you, and it's a little bit too much more than you want. I'm not worried about this position either. I want to add to it. But what ends up happening when you have a steep, quick move in the first hour or so of trading, you end up selling levels to hedge that are pretty shitty. So then you end up losing for the day on that too. But again, I'm happy with the bounce. It's all about how you work the position. I'm going to talk a little bit about that. It's easier said than done. It is what it is. So let's get into it. I'll come back to this, what some of the other traders were doing that I want to kind of highlight that I think are good examples of how we work this. Okay, so global macro, what's going on? I've been saying that the biggest risk to this whole recessionary theme, which is the right theme, which is very true, and we might play out where 10 years off the low could get really fucking nasty from here. It really could. Are you going to have a mid-cycle slowdown and go back to accelerating economy? Very low probability. But also the U.S. could be Atlas that holds up the entire world. And I've been saying this. If you want to make the growth slowing call, you don't need to make a recessionary call. That's not really helpful. That growth is slowing is what matters, which gets you long bonds, right? First, gets you long the dollar. Actually, got long the dollar first, then bonds, and things like gold do well when real yields fall. But in real risk off scenarios, gold will get clobbered too. We're not even anywhere close to that. But my point is that here's our long bond call. I mean, massive run, right? Where's our euro call? I don't think I have it marked in the chart, but this went through 122. It was before that in April, right in here, in 2014. This didn't play out till September, October of last year. So that trend is in place, and we're going to have these pullbacks like today. I mean, these charts are due for pullbacks, especially in precious metals, especially in something like silver that's just gone straight up. A little bit easier to see on this side. And I lost my train of thought. Oh, so how are we going to play the pullbacks, the bigger picture pullbacks? A couple things. Coming into, so I just talked about the dollar led it on the way. Dollar euro down was the big picture macro theme that changed back here, led on the way down. And then, like I said, on Monday or Tuesday, that this was a short covering opportunity down here in the euro. We've had a bounce. Now, even though you've had the euro bounce, dollar down, gold has struggled. It actually was up pretty good yesterday, and that's why you need to take in the new highs. We sold into 50.52, is because rates were up. So it has to compete with that. So it likes it when rates are down and dollars down. You didn't have that today. But the point is that this is still a downtrend. That was a short covering rally. And what I wanted to highlight was the cycle, the daily cycle was low. And this can come up more. So we did sell some euros here today, but I'm still prepared that we could rally into like in front of 112. I'm full awareness of that. All right. And if you get that, you would think that puts a little bit of a tailwind behind gold, that much dollar weakness. But when we look at the gold market, it's been probably the strongest asset class on the planet. For a while it was bonds, and now it's gold. And what we need to pay attention to from a cyclical standpoint is our weekly cycles maybe rolling over a little bit here. We had some distance above the 8 on the weekly. And so this 1500 level, you'll see in a fractal manner in a second on the lower durations, the lower time frames. This is a major spot, but notice how the weekly is rolling over. And obviously we've been overbought, but that's what's going to happen when you have a phase transition and you have a new bull market in one of the best places to be in the world. Bitcoin stayed bullish for 3 years like this on an RSI. So don't focus on RSIs on long terms when you're in the dominant place to be. You want to care about the smaller cycles. All right. The daily's up, which is actually showing a little bit of consolidation. And then this is why I was added a little bit back today, and this is why you want to take on new highs. You always want to take on new highs. So here's how we manage the risk from here. We added a little bit today. I covered short calls. Let's see if I can blow this up a little bit better. We covered short. I guess that'll have to do. So real quick, resistance, new highs, buying, taking profit. When you're at these levels that you're taking profit on your futures, your calls, your long calls, it's okay to sell some upside calls and buy the downside puts, because what you want to think, you don't want to scenario build as far as direction, like I know what's going to happen, but you just want to give yourself optionality that, okay, if the market pulls back, I want to be buying futures here. But I'd also be smart to have some downside puts. I was buying 1480 puts. 1480 puts on strength because I thought maybe this would be a good area that I want to get long futures. I don't want to buy the 1480 puts after we've collapsed. And 1480 was pretty deep. I was buying 1515 strike puts, 1540 strike puts when we were on the highs. Not to get directionally short, just because I knew that I want to buy my puts when the volatility is kind of down, implied vol is down, and into strength. And then when you get the flush, that's not the time to go scrambling for puts. That's the time to buy your futures. And then you have your puts. Like I realized gains on these puts, these puts. And then I can buy the out of the money puts if I want to roll down. But the point is do it. Add and reduce, do that ahead of time. But you can still stay net long. I don't know. It's hard to maybe explain in a video. This is what we work on our teams, guys. This is why you want to go out and learn a trading program that'll teach you about moving average crosses. It doesn't teach you shit about how to manage risk. getting direction right is a small part of the game. Like, you want to be able to maximize pullbacks like this and not chase the highs and stop out on the lows. It's not all about direction. It's about it's more about how you manage your risk. You can do that through options. You can do that about adding and reducing. You can do that how you scale in, how you scale out, how you trail in, trail out. I'm getting tired of talking about this stuff here. If I just highlight what I'm trying to explain. Oh, I didn't even talk about S&P. So S&Ps was like one of the main highlights today. Oh, so I was saying, you don't need to short stocks if you have the grow slowing call. Stocks haven't broken. We'll come back to the stock chart, but this is why we've been long equities. I've been saying that over and over. You don't need to short equities. There's plenty of reasons to be long equities, but the other side of that is just be long gold, dollar, and bond. Okay, so notice this number real quick. I don't really care about how much money it is. Okay, that's a year-to-date number from a trader. Now, watch today. He's down. I don't really, again, this P&L open number it matters, obviously, but it's not, it can be misleading. He might have some protective puts he's had for 3 months that are at 90% loss, and he's made a ton of money on the other stuff he's already booked. But on the day, this is the gain. This is the pullback. You're going to have these pullbacks. So if you're up 12K on the year, like I just showed for this guy, a $2,000 pullback, okay, it's going to happen. If you guys think that your counts are going to go like this one way, you're setting yourselves up for failure. Not going to happen. Not going to happen. You got to ebb and flow. And you need to get comfortable in negative territory, because these are the buying opportunities in gold. You don't want to chase the highs. You gotta get comfortable in negative territory. You gotta get comfortable in the knee bends before you leap, right? You can't be over aggressive, because if you get a change of trend, then you're gonna wipe yourself out. I don't know how much more I want to say on this stuff. This equity move. What is this? Oh, just maybe in one more comment, guys. I know some of you want to see what the options look like. So here's that same figure. If you open this up, you'll see how these 1525 puts, if you put those on today, you don't have that gain. You got to put that stuff on into strength. You buy your protective puts. Most people will teach you when it's cratering that you buy your protective puts. It's the opposite. Not how you want to do it. And then here's some 1535 calls. So these were calls at some point, right? Call this 1535. Somebody sold those. Well, as the market drops, guess what? Boom. Now, more than likely, let's see where these futures, I look at that as my core position, right? Okay, I have a core position of futures. It's going to go up and down. I'm marketing my house. It goes up $2,000 one day, down $2,000. I'm long it. Long gold. Do I really care about that? But if I'm clipping off 2,700, 22,000, and then the market rallies back up and I reshort those calls and I buy back my puts again, or I add a little bit of futures, and this is trading around a core position. So this maybe up and down 2,000 goes like this, but you're booking $4,000 here, $5,000 here, $4,000 here, $5,000 here, $4,000 here. I could care less about what the core position. I care about, does it break trend or not? But that's what I mean by trading around your position. So these are book gains. Boom, 2,700, $2,000. Boom, book. This 2,400. wait till this goes back to 1565 and there's another $6,000 there. So then you're going to make $2,000 in there, $2,000 on the pullback, $4,000 plus another 6 on the futures on the way up, plus maybe whatever these calls are worth. So this is the power of adding and reducing, with the idea that you have to have certain levels and know where the trend changes and how to play defense and or to just change, get out of the position, hedge it, play defense and or flip and go short. All right. So that's the stuff that we work on. What we do, guys, is we're rolling out some retail product that's, I don't know. I've got big ideas about how far this can go, but I want to help people that are maybe brand new, retail side, that are passive investors. They can't trade all the time, but they want to get on the right side of the market. We've had the call on the dollar. We've had the call on bonds on the lows. We have this whole call to not be short equities, when most people have the same call as we do, but then they want to short equities. That runs them over. But if you just want to get our newsletter or be a part of our community for cheaper, this is going to be a part of Jenkins Risk Management. And then we're going to have coaching, analysis, education. If you're new to Forex, I got courses for that, options. The idea is to kind of be a one-stop shop. And then this is where I'm kind of transitioning things to, though. Jenkins Capital Management is going to be about our assets under management, the money that we're running, and our prop programs. So before I would do group coaching, but now I'm going to get you guys some capital and partner with other firms. And then, but it's one thing to just get good training. Like you can go get the courses, guys, and then, or you could be part of our room. And if you do the coaching, you can get the accountability, and you get to work with me, and we work together on what works for you and what's not working for you. But you still need a program that says, like, how'd you do for today? What was your max loss for the day? And put those metrics around it. And then if you execute on that, you have the potential for more capital. So I'm setting that up here on these programs under the prop trading. And then the institutional that's more of my business, one-on-one with institutional guys. But yeah, that's what's new. That's what's coming. And then, like I said, at the top of the video, how freaking long is this, man? I don't know if you guys saw this. I did a couple weeks ago, just talking about the recession risks. And it reminds me of 10 years off the low when I started in the business, and just how devastating a real downturn can be. And we haven't really had one. There's a lot of new traders in the market that haven't experienced a downtrend. And today was even a good example of a drawdown. It wasn't like we were puking and taking stop losses. We were actually adding to stuff, like I talked about in EBEN. But this is how most of August and September has been for us, is these types of results. What I talk about here, not only from maybe an economical standpoint, as far as like businesses that you run or companies you work for, being aware that there's recession risks, but then let's get you on the right side to actually profit from it, while everybody else gets blindsided. So, this has been 3 years of me putting together different courses. I've spent at least 20, 30 grand in my career learning some of the same stuff, and I never got it all put together in the way that I did it. So we used to have this package at $3,500. This is a steal, guys. And I'm not going to keep it like this. I'm going to bundle this into my prop programs, because if you're serious and you want to learn to trade, then you'll be in the program. It's going to be a part of the program. And this is kind of like a retail price that's not going to be around very long. So I would take advantage of that. And then this is the coaching offer. Everything I think that's pertinent, and 10 group coaching sessions. That used to run $3,500 on its own. Plus you get all the trading courses that used to never do that. You get an iPad, just to commemorate kind of how we think about things and risk, and some of the past economic reports I've done in cycles, and past training videos, a bunch of iPad bonuses. You guys can read about it. But the key is just to work on you on the coaching side and be a part of my team and get to know me better, but also kind of I get to know you as a trader. And I've trained several guys that have come right out of the college, or I trained one gal, but she didn't want to trade for very long, so I could have trained her. But the point being is that I'm taking guys from not knowing bonds at all to being six-figure guys. This is what they do full-time, trading, great careers. And now we just take it a whole different level. So whether it's crypto to Forex, teach you the same stuff. So you get a ton here, guys. So anyway, there's the prices on that. This is going to go up also. Pick your poison. Get on the team in the morning or message me. We're moving to the Symphony program. App. This is I don't know how to say competitor to Bloomberg, but they're probably number 2. We're running our new trading app through here in alerts. So you want to be a part of this program, these teams. A lot's going to be changing where we're not going to be having a free room. You're not anybody, it's not like you're just going to be able to hang out and trade these markets anymore, guys. You want to be a part of the team. We're here to coach, help you. But we're going to get serious about this stuff, and we want you to be a part of it. So that's why I put together this flash sale, 77% discount. All right? See you tomorrow. We'll see how we finish out the week.